What up, guys? How you doing? It's your boy B, and we're back again with another Financial Friday. All right, so today's topic is going to be on assets and liabilities. It's pretty important that we talk about these things. Definitely talk to your kids about this stuff. And with that, let's get started. All right, so today's topic is assets and liabilities. What are assets and liabilities? How do they affect your life? Right, so this is kind of what we want to discuss today. So let's go over the first question. What are assets and liabilities? Well, in a very basic and short-term example or definition, assets put money in your pocket and liabilities take money out of your pocket. And that's the simplest and most basic understanding, right? Assets are a positive thing, right? So you ever hear somebody say, oh, he's an asset to the team, right? Obviously, that's a positive thing. You know, he's an asset to the team. And assets can appreciate in value. They can. Normally, they will. And appreciation is also a positive thing, right? I appreciate you. I appreciate your help, right? Talking about it's usually used in a positive manner, right? Now, liabilities are a negative thing, right? Liabilities take money out of your pocket, right? You're liable for these repairs. That employee is a liability to the company. So simply speaking, a liability is something that you're responsible for. Okay? It's important to know at least that basic understanding. We don't need to get very technical on it. We don't need to go very complex into it because it can. But that's just the basic, right? So how do these things affect your life? How do assets and liabilities affect your life, right? So the answer to this question depends on a lot of different factors, and it's going to be different for everybody depending on kind of where you fit in and what the circumstances are in your life. A car, a house, clothing, jewelry, etc., are these things assets, right? Or are they liabilities? So remember, we're basing this on the most basic understanding of assets and liabilities. We're not accounting professionals producing a balance sheet, right? So a car, it can be, but in most instances, a car is not an asset, right? It's usually a liability, right? So it's a liability because car payments, right? You have to pay for the car if you are financing it or leasing it. You have to pay for car insurance. You have to pay for gas. You have to pay for car maintenance, right? So you have all these things that are taking money out of your pocket based off of that car, right? So the only way that it would be an asset is if you were able to offset that utilizing your car somehow. So like independent contractors, DoorDash, Uber drivers, whatever it is that you're doing, taxi drivers, your car is your money maker, right? So you make money utilizing your car. That's how it would be an asset. But you would need to make more money using your car than you have liabilities. Because if not, then the car is still a liability, right? Because you're not profiting in any way. Even if you were to break even, you would still be a liability because it's still taking money out of your pocket. So you need to be able to profit somehow, right? So the income you make from your car would have to be more than any of your liabilities and then some, okay? A house. Once again, house can be an asset, but in most instances, it is actually a liability. Why? Most people have a mortgage, right? So that's a loan with the house used as collateral, right? So you take out the loan, usually from a bank, and they own the title and deed to your house until you pay that off. That's usually how it works, right? So your house is they actually own your house until you pay it off, right? And if you don't pay it off, they come take it, right? So that's a liability, right? You're responsible for these payments until you're done making the payments, and you're not responsible for them anymore, right? But you also have property tax. So as long as you own that home, you have to pay property taxes. So that's, once again, money out of your pocket. So the home is not actually an asset. The way it would be an asset is, let's say I buy a home, right? I fix it up. I fix it up and then I rent it out, right? And the rent covers all my expenses and brings me back a little bit of profit. Now that home is an asset. It's not a liability. It's not costing me money. I mean, it's still taking money out of my pocket, but at the end of everything, what I'm left with is a profit. So I'm actually having money in my pocket after everything is said and done, right? So this is how you have to understand assets and liabilities. And the problem is you have a whole entire generation that doesn't understand this concept and just simply goes out there and takes on a whole bunch of liabilities, not realizing that they don't, why am I not moving forward in life? Because you've got this ball and chain holding you back. You keep making the ball and chain bigger and adding weight to it by taking on more liabilities and not taking on any assets, or not creating any of your liabilities to become assets, right? What happens when you have a whole entire generation of kids that don't understand this? And that's how our economy works, right? This is how you thrive and become successful in our economy, and we're not teaching our kids even the basics of this stuff. And you just keep telling them, no, go to college, get a degree, get a high-paying job, and then you'll be successful. Really, that's not the pathway anymore, right? So I digress. Let me go back to what we were talking about. So this is why assets and stuff like that affect your life, right? And it affects your life because assets can appreciate over time, right? If you're not holding on to any, your money is not growing, right? And there used to be a time when you could just save up your money and beat inflation at the same exact time. So even though you're saving money, you're still growing your money, and you're still eventually at the end going to have more money, right? Inflation is not going to kill that or decrease the value of that money, right? So you're actually profiting. But that's not the case anymore. That's not the world we live in anymore. I can't save money and get anything back because they're paying me 1 cent on $10,000. You get what I'm saying? Like 1 cent a month. What's that? 12 cents a year on $10,000. How's that supposed to beat inflation when inflation is between 2 and 3% annually, right? There's no way that I'm going to be able to beat that. And the old generation's like, nah, save your money. Yeah, you're good. Stay away from the markets. It's dangerous. It's manipulated. How am I supposed to grow my money, right? So frustrated with that generation, right? So the goal is that we teach kids that liabilities hurt you, right? Unless you're specifically utilizing it for a very specific reason, right? Like, oh, I took on this credit card debt to build my credit, right? On purpose. Purposely took this debt on, right? We have to help them understand, like, there's reasons, right? We don't want to take on liabilities. We want to reduce them as much as possible while increasing our assets and our holdings in assets. Because assets can appreciate, or bring back residual incomes, and help you to grow your money. This is how people for years and years and years and years and years have been growing their money and their wealth, by accumulating assets, right? You'll hear about people that buy properties and create a portfolio. I have a portfolio of homes or multi-homes or hotels, or not hotels, apartment complexes that I own, and it brings me back this certain amount of money, and you get what I'm saying? And that's how they grow their money, through that. Or people that did it through the stock market by buying tons of stocks or futures or options or bonds or whatever it was that they're trading and investing in. That's how they created their wealth. Or maybe they did a combination of those things, or maybe did a combination of those two things and own a business, right? So it's like, these are the avenues of creating wealth. outside of, becoming an entertainer in some way or hitting the lottery or just inheriting millions. So if you really want to grow your wealth, you have to understand at least the very basic concept of assets versus liabilities. It doesn't matter how old you are, whether you're 30, 40, 50, 60, or whether you're just a kid that's, 10, 15, 18, 20 years old. You know what I mean? You're just a kid. It doesn't matter. Understand this concept of, assets put money in your pocket, and you want to acquire as many assets as possible so that they can continue to put money in your pocket. With enough luck, those assets will also appreciate in value. So when you go and sell them, or what we call liquidate them, you can get a profit back, right? You don't break even. You actually make money on the transaction or the trade or the sell or whatever it was that you were doing, the investment. And that's how these things affect your life. Generational poverty is because you have millions and millions of people who don't understand this concept and just have a life where it's just a list of liabilities and no assets, no savings, low income, right? Assets and liabilities. You need to understand this. The youngest generation needs to understand this because this is how our economy works. This is how people are growing their wealth, right? So if you're not going to get a college degree, you're not going to work a job that pays you $150,000, $250,000, or even more than that a year, you're going to have to find out how to grow your wealth. And I can promise you in your research, what you're going to come to a conclusion is there's 3 things: asset building, and starting a job or starting a business, right? And those are the ways that you build your wealth. And right, obviously real estate too. I'm telling you, your journey is going to lead you to those conclusions. Every person that takes this journey comes to that conclusion that those are the 3 ways that you build your wealth. And the best way to grow is to either double down on one of them very specifically, or diversify and get involved in all of them, or maybe 2 of them, or you get what I'm saying? So you can do it any way you want, but those are the avenues and those are the tools. And it starts with you understanding what an asset is, what a liability is. Asset puts money in your pocket. So how is this thing going to put money in my pocket? I just bought these shoes for $300. How are they going to put money in my pocket? All right, well, there's some sucker out there that wants these shoes and they're real popular right now. He's going to pay $500 for it. So I just made $200 off of it. I never wore them. I never did anything. I utilized them as a way to make profit, right? And increase the money that I earned. And that's how I made this shoe into an asset. It was a liability because I had to pay for it. But once I was able to sell it, it then became an asset to me. Obviously, I got rid of the asset by selling it, but still, you get the point that I'm trying to make here, is that this is how you should be viewing things, right? How can this car put money in my pocket and stop taking it out of my pocket? How can my house stop taking money out of my pocket and put money into my pocket? How do I change liabilities to assets? How do I get rid of liabilities? How do I acquire assets? All of these things are things you should be asking yourself, because these things affect your life. And if you want your children to grow up and be successful, I suggest that you educate them on money and the concepts of your economy, at least the basics. It's so crazy out here how I've talked to so many people that don't know anything about money. They really lack a real good understanding of money. In every concept, in every way. They don't understand taxes. They barely understand concepts of savings and budgeting and investing, and just they don't understand these things, and they think that the answer to their problem is just make more money. And it's a shame. It's a shame that I live in a generation and in a society where it's like, yeah, there's so many people out here who don't know this. Why? You know what I mean? I think our economy would do so much better if it wasn't artificially manipulated quantitative easing. Just You just printed up extra money and called it quantitative easing, right? We just gave it a fancy name so that the dummies down at the bottom will think that it's something real professional and is good for the country. Quantitative easing. You printed more money. That's all you did. And you knew that what the result was going to be was inflation. So you're like, all right, well, what do we got to do to keep inflation from going too high? And that's what they're doing right now. So I digress. I always get off topic because I get real amped about these topics. Assets, put money in your pocket. Liabilities, take them out of your pocket. Educate yourself. Educate your children. If you like what we are doing with Financial Fridays here, please hit the like button, hit the subscribe button, and hit the bell notification button. Those things are really going to help my channel grow, and I would really appreciate if you did those things. It's free. It doesn't cost you anything, and I'm all about free here. All right, so that's been Financial Friday. I'm gonna see you guys next Friday. All right, peace out.